It's about that time of day again. My name is Joseph. It's Monday evening, February 6th, 2017. Welcome back to your newsletter. We're covering crude, S&P, gold, euro, and FDAX this evening. Crude oil is bearish, but the strength of today's session, along with an important trend line, is telling us that sellers may be a little bit more patient to wait for the next selling opportunity than they were earlier today. The S&P 500 is bearish, but the sellers gave us a great clue when they retested today's lows, telling us exactly where and where not to be looking for that selling opportunity tomorrow. Gold is bullish, but one big monster clue in the chart tells us to beware buying right now and wait for a correction tomorrow. The euro is bullish, but that may not last much longer as price re-enters the correction zone from a spike in channel that started today. Can't wait to see what this pullback is going to look like on the euro. And of course, the FDAX is bearish, but a wedge on the chart. I love wedges. I love wedges. They tell us exactly where a correction is most likely to help those bears avoid selling into major support. If you're an FDAX trader, you definitely want to make sure you stick around right for the end of this video here tonight. I got a great newsletter in store for you guys and gals tonight. Coming back from a great weekend. Hope you guys had a great weekend out there. Another day, another big opportunity though this week. You got a big week here, this second full week of the month of February. Hope you guys had a great weekend. We're back in the action, back in the saddle again with a great newsletter. Before we jump into those charts though, I do want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's only a small portion on the YouTube video. Not to worry though. There's a link in the description of that YouTube video. Follow that link and come join me for the full-length version on the blog at Sideways Markets. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social. I'm always posting relevant articles, charts, updates throughout the day. Follow me on my many social media channels there in the lower left-hand corner. Download today's charts. How easy is this? You can have all the charts from my video tonight on your computer for tomorrow. Follow that link below the video to download those charts. And please don't forget, you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. Grab that free pass in the upper right-hand corner if you're a member here at School of Trade and come out and join me as a guest. And please don't forget, if you're brand new here to the SOT community, we get a great frequently asked questions page on the right-hand side of the website. And I'm always here to answer all your questions if you guys have them along the way. Boy, oh boy, I think my blood pressure just came back to normal after that game last night. I'll tell you, I'm just gonna toss this out there. We gotta put a petition around here, something like that, to get the National American Football Day, the Monday after Super Bowl. I'll tell you, I had to rein in the festivities last night, knowing I had to be with you guys here today. Not that I don't love you guys, right? But it was, boy, oh boy, what a great game last night. Hope you guys enjoyed it. Hope you're safe. Had a great time with family and friends here. I know we did here in Los Angeles. Anyways, though, another big opportunity here this week. Big week ahead of us here. Let's jump right in. Got some big charts to look at here tonight. Some really great learning opportunities tonight and some great earning opportunities for you guys tomorrow. Let's double check the schedule, the calendar for tonight. We're going to hear from the RBA tonight. We'll hear from our good friends down under at 10:30 p.m. Eastern time. So keep that in mind. If you're trading the overnight right into the Asian, into London session tomorrow, I'll be aware of that. 10:30 p.m. tonight, the announcement. Not expecting it too big of a mover, but definitely be aware of it. It is on the calendar here. And then we go right into Tuesday, February the 7th. We're coming out of non-farm Friday. We got 3:30 a.m. tomorrow morning, the Halifax Home Price Index in Great Britain. We then, of course, go into the U.S. session, 8:30 a.m., right, from the U.S. international trade. Merchandise trade, our good friends to the north. And of course, we got the JOLTS report tomorrow at 10 a.m. That's always an important news number here, that JOLTS report. So 8:30 a.m. tomorrow, 10 a.m. for the JOLTS report. Those are pretty much the big headline news numbers tomorrow, 8:30 a.m. and 10 a.m. Don't forget, we're going to be with all of our advanced members tomorrow in the trade room starting off at 8 o'clock Eastern time. Come out and do it here with me. Come out and execute the strategy with me tomorrow at 8 o'clock Eastern time. Now you guys know the important news events on the calendar here for tonight and for tomorrow. Let's dig in here right now. Man, it feels good to be back here. Had a great weekend, but I love getting back here each night on the newsletter. How about some crude? Crude is bearish after completing a triple measured move this afternoon. Yeah, just a little bit of strength to the downside. And with such strength here this afternoon, combined with this rising support trend line, we assume assume that sellers will take some profit and wait for a higher price to sell if they can get a chance tomorrow. We talk about this all the time throughout our trial, in our advanced course, in our trade room. What's the easiest way to identify reliable selling opportunities? Well, first of all, find a place to sell in a bear market at resistance, right? So here's areas of resistance here overhead, right? Plenty of areas waiting overhead as resistance here, right? So one aspect of identifying really reliable selling opportunities in a bear market, right? We want to sell in a bear market, right? Would be find resistance, right? So prior swings, prior reversal lines, moving averages overhead, things like that, right? Find an area of resistance. Now, the next piece to that puzzle of isolating or identifying reliable selling opportunities is making sure that other sellers can also participate and earn a profit, right? Here comes in now this rising support trend line. And this rising support trend line is a really big deal because as of right now, if the sellers just go ahead and sell right now, is there a lot of profit here waiting? Right? Is there a lot of open space for that trade to go lower? There isn't, right? There isn't. So when we look at this chart right now, we see obviously we're bearish, right? I mean, there's absolutely nothing about this move lower that says it's time to be a buyer, right? The one thing we do notice though is that whenever we have a real strong move, right? Big, the whole day was bearish, right? A lot of traders will look at this and they'll say, okay, if I have an open position right now, better take my profit, right? Because we may see a lot of profit taking and price may rise here, right, overnight. So we definitely expect to see, anytime we see a real strong continued move in one day, we expect to see a little bit of a short covering rally, right? The sellers get out, they buy their way out. Now, we start looking for that next opportunity here, right, to be a seller. I need two things. I want to combine resistance, but I also want to make sure I have enough room, right? Because I want to leverage that self-fulfilling prophecy. I want as many sellers as possible to come in and help me on the way back down. And so while there may be a couple short-term scalpers here, guys and gals looking for really small short-term targets, the vast majority of the sellers are going to be looking, again, I kind of label this as the battle zone, right? The vast majority of those sellers are probably going to want a little bit more open space, a little bit more profit potential, and they're going to want to get this price, right, up so they can sell it back down. In a bear market, I want to sell at resistance, but I want to make sure I don't sell into support, and that rising support level is definitely going to be something that we're looking for. Really, unless we see a remarkably strong move higher, right, you're going to have sellers pretty much seeing anything that goes higher here right now, right, as a selling opportunity. So as we push higher here, looking at buyer failure, sending it back down, right, we're looking for if it goes a little bit more dramatic here, right, if buyers do grind on the way up, breakout pullback, right, on the way down. The most important thing right now is going to be, let's get this price up off that low so we can find some resistance, right, but then make sure we get high enough, right, to get this price to come back down and at least entice enough of those sellers, right, it's not selling into that area of support. So the big reason why I'm expecting this price to go up a little bit higher here is because anytime we see a big strong move, continued move in one direction, yeah, I want to sell this, but when the day ends right at the low of day, it's usually going to promote, right, some profit taking, and that of course will get price to rise, and then that of course, that rising trend line support is going to deter, right, a lot of these bears, right, from trying to get in, right, and selling low right now. I'm not going to want to sell into that trend line, right? I'd much rather sell if we can go up into this battle zone, right, and bring that price back down. Now, what is the scenario here where this becomes a bull market, right? What is the scenario? Here's a really, and I kind of call this the disconnect. So here are two scenarios you want to keep in mind, right? Here's scenario one. Big strong move down. Let's do this again. Big strong move down, right? We grind higher and we continue. Big strong run lower, right? We reach a measured move, we reach a channel rotation, we reach the objective for the bears. The bears take profit, right? And they grind higher. They grind higher. So watch out for that grind tomorrow, right? And the key is, and you'll see it in a moment. This is scenario one, right? If we get a Obviously, when the bears are in control, right, you see a bunch of explosiveness going lower, but we don't see that explosiveness going higher, right? So in a bear market, it'll be explosive going lower, but then it kind of feels like the market's kind of tied, right, to a weight. It almost feels like there's a rubber band attached to the moving average. You know, it can't get away from that moving average. And then eventually what happens is the bottom falls out of it, right, and we get to selling, right, back down to retest that low. So second scenario would be, we see same thing, strong move lower here, but now, right, strong move lower, explosiveness to the downside, right? We reach the measured move, we reach the objective, right? The bears say, I'm done, they take their profit. Price grinds higher, right? Again, kind of feel that rubber band feeling, right? But then all of a sudden, for some reason, the bears go, nope, it's a little bit too high for me. Maybe there's news that comes out. Maybe there's something else in the water out there. But anyways, we blast higher, right? That strong move higher, right? I called it the disconnect. It feels like there's that tug of war match between the buyers and sellers, and the sellers let go of the rope, right? That strength to the upside, that's what you want, right? And then you can go, right, looking at this, at being a buyer. Now, this can happen anywhere, really, right? That disconnect, that strong move higher, that can happen pretty much anywhere, right? Usually it'll happen somewhere, right, as the sellers start to, again, grind up into that battle zone, and then blammo, right? We see that strong move higher. Sometimes, though, big strong trend like this, right? It takes off to the upside on profit taking, but then for whatever reason, it kind of has some tailwind to it and keeps going. So look for that strong move up, right? If we get that real strong spike higher, that's going to tell you that it's safe now, right? Looking for buying opportunities on the pullback to that moving, right? To that moving average. But anything else here, though, right? Grinding, right? Look at that battle zone and then get that price coming back down. Obviously, that trend line is going to be a target in the short term, right? And the objective will be to retest that low. Remember, big correction up, the objective is to retest the low. The objective is not to go through the low, right? Big pullback into that battle zone. The objective will be to go back down to that low. And then once we get to that low, then we're going to take a timeout and see what happens, right? Do we bounce and sell it again, or do we run through it, breakout pullback, and go hunting, right, for another bigger leg lower? We'll wait and see tomorrow. So buyers, hang tight until you see that disconnect. Sellers, expect a little bit of a flutter higher here, again, just because of that rising support trend line, right? Not going to give those sellers a chance to sell conservatively, right, at this low. How about some S&P? The S&P is bearish and trading right in the middle of a range this evening, telling the sellers to be looking for trading opportunities up at the high of that range and to avoid falling for traps down at the lows because the measured move is lurking just a few points below. Now, the S&P gave us a huge clue here this morning this afternoon that pretty much told you exactly what was going on. Now, we're going to see a good example of this on the euro, but here was a really good example earlier where the S&P, of course, today was Reaction Monday, right? The Monday after non-farm Friday. We talked about this last Thursday evening in our newsletter ahead of Friday's session. So we were expecting some fireworks today, and we definitely got them, right? The S&P opened up here and just took off to the downside. Now, when I see a market do this, I know that a lot of times when you see a real strong run like that, the market goes too far, too fast, and nobody really wants to sell that low. And of course, we see a great example here. This is what we're looking for on crude, right? A big correction up and then a move back down again, right? See how the price corrects up? Now, why does it correct higher? It corrects higher because, again, that strong move lower, I mean, unless you are extremely aggressive with it, you're going to wait for a pullback, right? Well, by the time you get the pullback in, right, it traps in all the bears, horrible signal candle on it, right, and runs higher. The bottom line is too far, too fast. Price has to now go higher to attract more sellers. By the time we get enough sellers in the market, it rolls over and retests that low, much like what we're looking for on crude oil, right? Goes very, very far down, comes back up to attract more sellers. As more sellers enter the market at resistance, when there's enough room to go back down to that low, they sell it back down. Now, here's the big clue. There's the big clue right there. What happened when we went back to retest the low? Did we blow?